Okay, so the benefits of trading. We've already talked about the benefits of trading futures. We already have the hours on our side. Okay, with hours of trading, we get to open up at 6 p.m. We on Sunday evening, and we're basically open 24 hours until 4:15 on Friday, 4:15 p.m. So the market offers up opportunity. I don't have to wait till 9:30 to trade every day. Okay, another big one is leverage. Leverage is huge because the value of one contract of the S&P E-mini, which is the futures for the S&P, is $50 times the price of the S&P cash index. When you guys wake up at 8 o'clock in the morning, those who trade stocks or options, and you hear about the S&P being up 20 pre-market, they're talking, or whatever it is, 5, 6, 7, or even the Dow, those are futures that they're talking about. Now, once the market opens till 4 p.m. on CNBC or Bloomberg or whatever you're watching, in that market time frame, they are talking then about the cash market, what the cash market is up or down that day. So, if the S&P is trading at 1,000, which right now it's actually right around 1,300, but I wanted to make the math easy, then the value of one contract is $50,000. Now that seems pretty steep, but a benefit of trading futures is that most brokers are going to allow you to trade a contract with 10% equity. There are many brokers out there that will let you trade with 1% equity. Okay, there's some out there that let you trade with less than 1%, but that's really not needed ever. Okay, so those are two big ones, hours of trading, leverage. These aren't the only benefits, by the way. I'm just giving you the four big ones. And the reason that we trade the S&P 500 futures over anything else is for two reasons. Volatility being one. Remember, what our flyer says, make $150 in 10 minutes. Well, guess what? I personally, since I do this for a living, want to make more than $150 a day. So I want volatility. I want the market to offer me up a chance to make thousands of dollars a day. And with the S&P 500 futures, it allows me to do that. Also, the reason that we trade the S&P 500 futures is because it's very liquid. It is the most traded of all futures, the S&P 500 futures. So no matter what time of day we're trading, there's always a lot of volume trading that I have no problem getting in and out of my contracts. Okay? So what do you need to trade futures? Obviously there's capital involved. We need to have money to trade futures, but how much? It's expensive. The answer is you need about $600 per contract. Now again, you need to have that in your account. It doesn't cost you $600. Someone got confused on that before, and she was very excited when she heard that. It doesn't cost $600. I have to have that in my account per contract to trade futures. Okay? Now, there are some exceptions, and this depends on brokers, and we're going to talk about that a little bit later here. Overnight trading sometimes, and I'll tell you the reason for that. If you hold a contract overnight, or several contracts, depending on, it doesn't matter how many contracts. If you hold overnight, typically 3:15 to 3:30, in that 50-minute time frame, your broker is going to want you to have 10% margin per contract in your account. The reason for that is they're making assumptions. The first assumption is you're sleeping. Okay? And in my case, that's a very good assumption to make. Okay? The second assumption they're making is that you don't have a stop loss in place. Whether you do or you don't, they're assuming you don't. And the reason 3:15 to 3:30, by the way, that is when the German markets open. So we can always be aware, I always tell our members this to make them aware of this. We're always aware of American news. We need to know, okay, what our economy is like. So we need to know unemployment. We need to know PPI reports, FOMC announcements. What we don't pay attention to is that Europe has the same kind of news that comes out. The problem is we're sleeping, or at least I'm sleeping. Some of you guys, if you're up that early, God help you. But anyways, I'm sleeping in the morning, so I don't get to hear this news, and it can definitely affect the market, good or bad. Okay, so that's what a lot of brokers will require you to have 10% margin during that time frame. Now, you typically need a minimum account size. This depends on the broker. There's a lot of brokers that will let you in with a minimum account size around 1,500, 2,000. We do not need to have huge accounts to trade futures. Okay, we're going to go over an example here in a minute. So let me tell you a little bit about myself as a futures trader, and this is what a normal trade looks like for me. Okay, let's say I'm going to go long or buy 2 contracts of the S&P futures at 1,000, and I get filled, so I'm long 1,000. All I need to have in my account, remember, is $600 a contract. So I only need to have $1,200 in my account to make this trade. I'm using $1,200 of my account to make this trade. Now let's say it goes up 1 point. Right? What do I make with 1 point? It's $50, but I'm trading 2 contracts, right? So I'm going to make $100. So it goes up a point in less than 5 minutes, which is very typical. You're going to see that here shortly. So I make $100 in about 5 minutes. Right? $100, 2 contracts at $50 a point. Now I want to explain this to you. I know a lot of you guys are stock guys. So we'll talk about ROI, return on investment. My ROI is over 8% in 5 minutes. Right? I made $100 with using $1,200 of my account. Now let's go look at a stock. Now I used to be a stock guy. I grew up trading stocks and options. That's how I paid my way through school for the most part. Now let's say I want to make that same $100 trading stocks. A lot of you know stocks very well. Now I'm going to go with a normal price stock, right? 83. There's a lot more expensive stock. There's a lot more inexpensive stocks. But let's go, we're somewhere in the middle. And let's say I'm going to buy 100 shares of XYZ stock, and it's trading at 83. So what does that cost me? Right? $8,300. Now, if I am lucky, and my broker loves me and my credit thing passes every requirement that they have, they may let me have as much as 50% margin. So let's say they let me have 50% margin on this account. Okay, so if I can get 50% margin, I need to have $4,150 in my account to trade this one stock. And let's say with the trading at 83, what do I need to do to make $100? It needs to go up a point, right? It needs to go to 84. So let's say it does. Goes up to 84. Now I want to talk about this real quick. You guys might know a couple. How many $83 stocks go up and down several dollars every day and let me have opportunities to make $100 several times a day? You might know a few. Okay, but what's my return there? My return is less than 2.5%. Now, still nothing to squawk at. So I made $100, but I had to lock up $4,150 of my account. Now think of it this way too. If you said, listen, I don't want to do $4,150 in an account, so that means now I need to find a cheaper stock. So let's say I find a stock that is $25. Okay, and I can get, again, margin, 50%. Okay, so $25, and I only have to have half of that, right? So I'm looking at about 2,500, or that's 2,500. So 12 something in my account. Now, how many $25 stocks do you know that go up and down $1 several times a day, every day? Again, personally, there might be some, but you're now narrowing it down quite a bit, and you're going to be looking for a lot. So again, the difference between the two. As a stock buyer, you're looking to make money in stocks, right? One stock, if I could get margin, 41.50. Stock goes up a point, I make less than 2.5%. Me as a futures trader, I can trade 2 contracts, only use $1,200 of my account, and it goes up 1 point in less than 5 minutes, I make over 8%. Now I'm going to show you, I think I put them in here. This is today. Now I want to tell you that I don't have to do research on dozens of stocks. I'm not going and looking at PEs and earnings reports. I don't have to do that. I look at one thing every day, and that's my 5-minute chart. So here you go. See 5-minute chart? 5-minute chart here. This is what happened today. And this is what we teach our members every day. We had a short at the open, 9:30. Now, we had a lot of members that were already done for the day because we made money pre-market. A lot of people made 4 points pre-market. Or 4 points, $200 per contract. But those who traded with us into the market, our first short at the open was at 16.50, right here on this 5-minute candle. Now, within 15 minutes, we were taking 2 to 2.5 points. The reason that we took profit early is because we had news today at 10. So we made about 2.5 points, 2 to 2.5 points in 15 minutes. Again, that's 100 to 100 a quarter a contract. So that was the first trade that we made today. Many of our members, again, were done for the day, made enough money to quit for today. Second trade, a little bit later, right around 10:45, 10:50, we were shorting 15.50. Now again, my members knew to do this according to our teachings without me having to say anything. And our target was 13.11. So this was 15.50. We were shorting, so we were playing the market down. And we had a target of 11. How many points is that? That's 4.5 points. Now this trade happened to take 5, 10, 15, 20, 25, 30, about 35 minutes. Okay, but if per contract, let's say 4 points, is $200 a contract, right? You need $600 in your account to trade 1 contract. So you would have made $200 on 600. And a lot of our members did. The ones that were in the room today trading, that were still trading. That's 33% in 35 minutes. Now I'll tell you, listen, not all of our trades are 100%. Because we then went long at 11 and we took a half-point stop loss. So we lost $25. After we made several $100s, we just gave back $25. But you know what happened right after? We shorted 10.75 with a target of 0.5. Now we're talking about a 5-point trade in 5, 10, 15, 20, 25, 30, 35, 40, 45, less than an hour, about an hour. That's what we do every day. That's what we teach our members. By the way, I was at lunch. When this happened, and my members did this without me having to say so. This is just the stuff we teach. We're going to get into that here shortly.